Closed sales in Sarasota and Manatee counties jumped 20% in February 2026. Hey, it's Sean Reddy, Keller Williams Ready Group, and we're bringing you the Sarasota Manatee Market in a minutes. Minutes. We'll probably go a little bit longer than a minute. We're breaking down the month-over-month and year-over-year trends of the Sarasota Manatee real estate market in 9 key metrics so that if you are in the market as a buyer or a seller or both, or plan on entering the market anytime in the next year, then stay tuned because you're going to want to learn how to leverage this data to make the best move and the wisest financial move for you if you are transitioning between homes. So a little bit on the color coding. If the metric moved in favor of sellers, it is coded in green. If it moved in favor of buyers, it is coded in red. And holy smokes, that's a lot of green. That's a lot of tailwinds if you are a seller. We'll start with the Lone Ranger red metric first, and that's available homes rising for now the 5th straight month, up 2% month over month, over 11,000 homes on the market between those two counties. Yeah, again, 5 straight months. Now, interestingly, flanking the available homes are 2 green metrics, one of which being a drop in new listings by 12.3%. Now, of course, that's on the heels of a 51% rise in January, but new listings fell, and for the 2nd straight month, purchase contracts increased, more people buying more homes. So you had less inventory hitting the market, you had more of it selling, yet the total amount of homes on the market is up. Now, that's going to be indicative of a lot of tailing inventory, meaning homes that have been on the market for quite some time, still hanging around. But speaking of homes not on the market, coming off the market, both the average and the median market times decreased month over month. Average for the 3rd straight month, small movement, going from 89 to 88. But the median dropped 17.5%, going from 57 to 47. Obviously, if you're a buyer, you have less time to act when you see the home that you like. When you are a seller, you can set your expectations based on average and median market times and use that data to your advantage to maximize that selling price. We already talked about new listings and new contracts. I kicked this off talking about a 20% rise in closed sales month over month. Now, that doesn't wipe the 23% drop from the month before, but brings it back up to the Mendoza line. Month over month, both the average and the median selling price, you heard that, selling price, not values, but selling price, both up month over month, average up 2%, median up 0.6%. And finally, the sold price to list price ratio, aka the seller leverage factor, is up 0.5% month over month. So on median, sellers are getting 96.6% of their final asking price. Not original, final. Sometimes original, but usually not. Now, year over year, what does that look like? About a 50-50 split between those reds and those greens. Reds being the headwinds if you're a seller, greens being the tailwinds if you're a seller. But the biggest movers are the market times year over year. Although they're down month over month, year over year, both up about 24%. So taking 24% longer this year to sell a home than it did last year. But check this out, new listings down 19%. We don't have inventory numbers from last year, but new purchase contracts up 16%. So if that maintains, at least both moving in that direction, we're going to see those inventory numbers dwindle. Now, I don't suspect we're going to see new listings continue to decline. February, shorter month. We'll probably see, this is a 5-week month. We'll probably see numbers closer to 36, 37, even 4,000 homes hit the market in the month of March. However, we will probably continue to see purchase contracts trending upwards. Closed sales up 5.7%. Now, this is interesting. Average price is up 2.4. Median price is down 2.4. How do you explain that? Well, first and foremost, this is only measuring what's sold in these months. So February of last year, February of this year. This is not indicative of values across the board. But you get a few higher end sales, like $20+ million properties selling, it's going to bring the whole average up. Well, it's not going to impact the median. So the median is probably more telltale of the trend line for prices. Not probably, it is. Trend line for prices across the board, and that is down 2.4%. Also down, the leverage factor, down a quarter point, 96.58%. Last thing we'll take a look at is just a little bit longer term perspective. We're going to look at this data plotted out for the last about year and a half, starting with average and median days on market. Not really much to talk about there. It's been flat with a little bit of upward to it. Market times are just getting longer. Next one is a little bit more complex. We got 3 metrics on one graph, and I'm going to explain why. The red is total inventory on the market. Didn't start tracking that till July. That's why there's no red before that. But the blue is new listings hitting market. The yellow are new purchase contracts hitting market. And the key takeaway here is as long as there's a gap between the red and the yellow, for the sellers who are out there with their homes on the market, not experiencing a lot of traction, that is why. There's only, 25% of the total inventory going under contract in any given month. Not a super high absorption rate. So the other 75% basically are being shopped against the ones that are going under contract. So if it feels slow, that's why. You may not be positioned as a no-brainer when it comes to your the homes that you're competing with. Not much of a trend line on the purchase contracts, kind of hugging that 2,000, 2,500 range. New listings did see a pretty good spike in January of 2025, but kind of regulated since then. Now, they did jump up, as you can see right here. We'll continue to see if that is a trend or a one-off. Closed sales. You can see the data. Peaked out in spring, March, April, May of last year. Steadily falling since then. December was a big push, always is, year in and year out, with a big drop in January. So we have to see how this shakes out compared to January of last year, down a little bit. And then average and median price, you know the story there. Year over year, the average price was down about 15% between Sarasota and Manatee counties. Finally, sold price to list price ratio, hugging that 96, 97% range with some peaks, a couple valleys from there. We'll continue to watch that one as well. Now, how do you put this data to work for you? First of all, if you are buying a home or you are selling a home, or you're doing both in this market, two things to know. One, make sure you do align yourself with a professional who studies and understands this data. And if you don't have that person, again, I'm Sean Reddy of the Keller Williams Ready Group, happy to be that person for you. But if you do have that person, make sure you shrink this data down, because this is a massive 2-county area covering 12,000 plus homes. You want to know what that looks like for your town, your neighborhood, even your street level, so that you can leverage this data, because that's all this is data that you can leverage into the, if you're selling, the most profitable move for you, if you're buying the best deal you can possibly strike. If you're doing both at the same time, timing really doesn't matter. People get hung up on that, but all you're doing is swapping equity from one home to another. So who cares what the market conditions are? But anyways, I digress. Thanks so much for watching, and we'll see you in this segment next month.